Hello and welcome back. Today we're going to start drilling into stock or inventory. What we've done so far is I've given you very quick summary of how balance sheet works and how an income statement works. I've shown you the basic reasons why certain accounts on the debit side and others on the credit side. And I've also spoken a little bit about cash flow, the importance of cash flow. But we're now going to drill into stock or inventory and how your computerized accounting system works with it. Very simply, stock is everything about a business, about most businesses. Unless you're in a service industry, stock is absolutely everything. And the first thing you've got to do is control your stock that you've got on hand. Is you've got to make sure that your stock isn't stolen, for starters. You want to minimize the costs incurred of selling anything. So that's the first thing, is just controlling your stock levels. And then your second story in business is to actually determine how to sell your stock, what sort of markups to put in place. Do you run specials? There are a whole lot of choices that we will slowly get into about working with stock. But really, what this module is about is helping you guys understand how the computerized accounting system works with stock and what the reports are actually saying to you, so that you can make your own decisions in your own business about how to go forward in life, to save money first of all, and to grow your business, to make more money. So again, I'm going to move over to my laptop. Thank you. Right, so we're sitting at my laptop. That first slide that I've got there is from the old days. That's how you would calculate your cost of sales on a yearly basis. Is you shut your business down for a day and start counting your stock, and that would be all your members of staff, and you'd be sitting there adding up all of the values that you get from the quantities, etc., etc. A huge, long story, laborious story. But with accounting systems, computerized accounting systems, they run what we're calling a live stock system or an integrated stock system. So every single purchase and sales transaction that you do is actually adjusting your theoretical stock level, and at the same time bringing your cost of sales into account in your balance sheet and in your income statement. So I'm going to show you how it actually works. It's really so that you understand it first, and then when you're understanding it, you can look at the information that's being presented to you to be able to make decisions about how to grow your business. So when you're buying stock, I've gone through this transaction before, but really what you're doing is you're debiting your stock account. And in real terms, when you're doing when you're processing a supply invoice in your accounting system on your computer, you're going to sit, let's say, I know you can import the documents now from like your suppliers, so you don't have to go through it line for line. But you've basically got a creditor's clerk who's sitting with the supplier's invoice in front. They've opened up supplier's invoices on your accounting system. They enter who the supplier is, and then they just go through line for line for line on that document, each stock item. But behind the scenes, what the accounting system is actually doing is debiting your stock account, item by item, net of VAT, as this person is processing. And at the very same time, what it's doing is debiting your VAT account. I'm using 15% here. Sorry, it's just habit. It's what we've got in my country. So it's doing it at exactly the same moment. And when you finished processing the supplier's invoice, that's how much, it's a credit balance, it's a liability, it's how much you owe your supplier with the VAT. Sometimes you're going to have a very small rounding error because your VAT calculation might be slightly different compared to your suppliers, the way your supplier's computer system works. But that's bringing stock in. When we sell stock, now I've got this debit customer, it could be bank as well if it was a cash sale. I've doubled the stock price, so I'm using 100% markup. So customer or bank, $230. And then we're crediting sales, line for line again. Now this, your point of sale system is going to do it. For instance, if you're running a hardware store, or your sales clerk, when they're busy making a sales invoice, a customer invoice, they're entering all the items line for line for line for line. Each line has got its VAT amount. So you're keeping on repeating this transaction that I've got there. And what you're also doing is debiting your cost of sales at the same time. And you're crediting your stock. You're taking the item out of stock and you're putting it into your cost of sales in your income statement. It's doing this automatically behind the scenes. So what I'm doing is I've just described to you basically how live or integrated stock system works with computers. And what are the benefits to you as a business owner of this? It's very simply, I'm stating there that you can count your stock at any time. I mean, all you've got to make sure is that all of your processing for that stock item has been done. As a rule, you're not going to sell anything without making an invoice, but there are times that you haven't processed a supplier's invoice for whatever reason. One of the things you've got to make sure is that your admin system actually works properly. The paper trail, I suppose, is what the accountants call it. But I'm stating here that you can count your stock at any time. And I'm saying use the 80-20 principle. Is you concentrate on the 20% of your stock that have 80% of the value. It always makes sense, that. And I'm also stating that your system quantities should be correct. When you're processing a supplier's invoice, you're going to end up with a total, and that total should agree with what your supplier's invoice total is. So it's almost impossible to make mistakes. And then I'm putting there is watch for both staff and customer theft. Staff have got all day and every day to work out how to steal your stuff. Customers, you're always getting people that are going to come in and try and do a bit of free shopping at your business. And the only way to stop that is with security at the exits, CCTV, possibly depends on the kind of business you're running, as you might have a little bit of undercover staff walking around. But your staff, and I'm talking from experience in South Africa, it's almost as if they feel that they've got a right to take your stuff. You're the rich man, and they're the poor people, and it's only fair, if they manage to get a bit of your stuff for nothing. And I've put some examples there. One of my friends, he was in security, and I'm going back a long time. I'm going back about 30 years, and we've in Cape Town a big Walmart style shop where they had very expensive car radios being stolen, and they just couldn't work out how this was happening. And they put him into the business overnight, because at night time they actually pulled in cleaning staff when the business was closed, and he was up in the beams watching down, above the car radios. He actually saw the cleaning staff come along and pull the boxes off the shelves, and nearby there were pockets of potatoes. And if it was 20 car radios, they opened 20 pockets of potatoes and put these car radios in and sealed the pockets of potatoes again, which was with quite thick brown paper. And all 20 of those pockets of potatoes were on the one side of the pile. Very first thing in the morning, person walked in to buy potatoes, and he took those 20 pockets. Now you can confront him at the cashier's desk. The person sits there and says, well, all I came in was to buy potatoes. How must I know that they're car radios? And if the cleaning staff had never dealt with the person that was coming in to buy the potatoes, there's a mastermind behind everybody. How are you ever going to convict that person in court for stealing car radios when all he did was buy pockets of potatoes? It's one example. And another example I'm giving you practical examples of how things are stolen, is just to help you in your business. Restaurants are particularly infamous for not doing much in the way of admin. I think restaurants and farmers are probably the two biggest culprits there. Farmer sits there and says it's up to God or nature, whatever you believe in, whether they make money or not. In a restaurant, the guys are basically just too lazy to count, and they want to be the nice guy because they want all their staff to be happy and the customers happy and everybody must be happy. And in most restaurants that I know, they don't even bother to count things. Like, just for instance, the alcohol, they're sitting saying with food we're buying and chickens and beef and this and that, we're coming up with finished products that are not anything close to what the starting point was. Alcohol is so easy to keep track of. You can sit there on a daily basis. What was your opening stock? Did you issue anything to the bar? What has your cash register just said that you've sold? You can very quickly calculate whether the consumption of your alcohol is correct or is not correct. The thing is, as soon as you start doing that, you're not the nice guy anymore. And your staff, because they want to steal, will start bitching. Oh, Michael, we thought you were a nice guy. And now you're making us count alcohol. Don't you trust us? The answer is no. Your admin staff in this country, you see so many court reports about the admin staff stealing business owners' cash, just doing a transfer if they've got the rights to do the transfer of payments, in other words, EFTs, from your business bank account. Then put it through, make their own payments if you're not watching. There's all sorts of things that happen. I'm just bringing up a couple of examples. In business, you've got to look after yourself. You really have to. And this is why this livestock system is so beneficial to you, because at any moment you should be able to sit there and say, you go and do it yourself, or you send a staff member, just go and count this item, count that item for me, and you just check it. You can give them a list of things to count, and you compare it with your report, your stock quantity report at that moment. So what have you got on hand? So this, implementing the most basic security structures in your business to save you money, and any money saved is money earned. If say you're running a restaurant and your barman just steals $10 of alcohol, well, he sells it to somebody else, one of your customers, and he puts the money in his pocket. $10 a day is $300 a month. Now you might sit there and think, well, I won't really miss that. But if it's $100 and a day becomes $3,000, I'd start missing that amount of money. I can promise you, because everybody has to run their business their own way, but you've got to look after yourself. And this is what your livestock system is doing. And this is something you implement immediately. Because if you've got extra money, you can use that money to invest in your business to help it grow, rather than allowing your staff to basically run their own little business within your business when you're paying all of the expenses. You know, just going back to alcohol, if your barman brings his own bottle, for instance, of Glenmorangie into your bar, and he sells that bottle, the whole bottle, 30 tots, whatever it is, in one shift, and he puts all that money into his pocket, you working for him, he's not working for you. And how do you actually realize that he's actually doing it unless you catch him red-handed? Because your stock systems won't even tell you that the person's selling his own stock through your pub or restaurant. You've got to be careful. Let's look at the next slide. What I've put there is just the heading transaction types. Now, a computerized accounting system is working behind the scenes. So all of your staff, each time they do a transaction, so I'm talking anybody, whether it's a cashier or if you've got invoicing clerks, sales side, and purchasers side, each time they process, is they actually are automatically generating the accounting transactions in the background. But for your computer system to know what to do, your computer system has to be told how to handle the different types of transactions. So you've got to set them up. And so what I'm saying on this slide is most of your transactions that you do on a daily basis, like let's just say that you're paying expense accounts like rent or whatever it is from your cash book in your computerized system. You've just got, is it a payment? Is it a receipt? Side of your cash book open. If it's payments, what we're paying rent. You just look up the rent account, put through the amount of money. It's easy, and it goes through with the VAT. You know, other transactions, like if you're receiving money from your debtors, you'll see that the VAT column is grayed out because you've already raised the VAT when you created the invoice. Now you don't want to raise the VAT again when they pay you. So there's certain basics. It's the same as when you pay your suppliers, your VAT will be grayed out to prevent the duplication of VAT because you raised the VAT when you created the supplier invoice. So all of those transactions I'm not going to go through to in any detail because, like I said to you, I'm not trying to teach you to be bookkeepers or accountants. But what I'm saying is that the stock-related transactions are more complicated. And I've just shown you on the slides before now what your transactions basically look like. But I'm saying is that your purchase transactions need to know the GL account, the general ledger account for stock. All right. Because obviously, as you're going to tell your system, this is the supplier that we're buying from. These are the stock items which you've created on your system. And it needs to know which GL account to debit to put this stock into the system. And then your sales transactions, they also need to know the sales account to put the sales through to. And then they need to know in the background what the cost of sales account is, and also the stock account, so that they can, in the background, pull the stock out of the stock account and put it through into the cost of sales and the income statement. And then obviously, all of your creditors and your debtors, so your suppliers and your customers, have got their own general ledger account as well. And so does your VAT have its own general ledger account. So what your accounting system will set this up automatically if you're starting a brand new system. Or your software person will obviously help you out with this. I'm not going to go into details with you. I'm just explaining the concept to you so that you understand it. So what I've done here is from the income statement video earlier that I've done, I've created the trial balance just to show you the balance sheet and the income statement all in one and all in balance. And I'm using the same stock, same account numbers as I had in that trial balance from before. So you've got your stock account with the account number of 300, a sales account with the account number 500, cost of sales 550. I've just put in VAT with 490 because it is a balance sheet item. And then your customer account 320, supplier account of 400. So this is now just to help you understand when you're creating these transaction types on the next slide. You're telling your accounting system what to do behind the scenes. So while your clerk or yourself, whoever's processing, while you sit with that supplier invoice in front of you on your desk, and you're sitting with your supplier invoice open on your computer, you're just going through line for line exactly as that piece of paper from the supplier is. Line for line on your computer is you just duplicating it. And so each line is for a stock item. What's the quantity? What's the price of each? What does it add up to? And how much is the VAT for that line? And then you do the next line until you've gone all of the way through this invoice. So each time as you're putting stock into the stock account net of VAT, and you raising the VAT for each line. Sometimes there's a slight difference because of your rounding with percentages that your supplier and yourself might disagree by a couple of cents. These ways, it's a minor problem. We're not going to go into it. So, and then obviously is crediting your supplier with the total, including VAT. And that's a purchase transaction that is actually happening in your accounting system while you are just sitting there processing a supplier's invoice and just bringing in each stock item, quantity, net price, and VAT, line for line for line. That is the entry that is created by the accounting system. The same, in essence, is happening when you're doing your sales invoices, your customer invoices. It doesn't matter whether you're at your point of sale, pay point, your cash register in like a hardware store, or you've got a sales staff member sitting creating a sales invoice, as they're doing exactly the same thing. Is you've chosen who your customer is. It might be cash and it might be a specific person or business. And that total will be debited through to your debtors or to your bank account if it's cash. And again, it's just line for line. Your sales, each line for each item, how many, what's the net price, and then for that line is what's the VAT that's being raised. And you just keep on going through line for line for line. And your accounting system is creating this journal entry. That's just the sales side. It's of the transaction. But there's a step further that it has to do because you're running a livestock system. So behind the scenes, and your accounting system is doing this automatically. for each line, it's debiting 550 your cost of sales, net of that, and it's crediting your stock account, 310, net of that. It's doing it line for line for line. In the background, your staff members don't even know that they're doing this. And this is how your life, the stock system works with computerized accounting systems. What I've brought up now is up until this point, I've used one sales account and one cost of sales account. And I've said to you, I've just explained to you in a little bit more detail now how it actually processes to very specific general ledger accounts behind the scenes without you noticing. So every single person that's touching a computer in your business is actually doing accounting work without realizing it. But I want to take it a step further now, because I've said to you earlier on say after we'd gone through the income statement video, that the information that you were getting out of the accounting system at that point was just telling you whether you're making a profit or a loss. But it's not giving you enough information to be able to work out why you are making a profit or why you are making a loss, or when your business is doing better and when your business is doing worse. And now I'm taking you into a drilling in point. You might have slightly different names for these concepts in your accounting system. But how I know it is the accounting programs that I know have got what they call inventory groups that link to different general ledger accounts. So that transaction type that we've just looked at, okay, is we now using, again, a hardware store, and I'm always using a hardware store because most people understand how hardware stores work. We could create different sales account related to different costs of sales account for different divisions of stock. Because what we're trying to do in, let's say, this hardware store, is we want to know, after grouping our stock items, where are we actually making more money and where are we making less money? So we're breaking up our sales and cost of sales into these groups. And now this is giving us more information about how our business is actually working. So what I've done is I've created groups of just like general building materials. That would be, say, your bricks and sand and cement, all that nonsense. And then I'm saying wood, all of the timber that you need to build houses. Break it up into plumbing, electrical, garden center. And if we're linking the stock items that fall into these different groups to these groups, then behind the scenes, the computer system is going to generate the accounting entries that post to these accounts, the separate sales accounts and the separate costs of sales accounts. And if we run a system like this, we can sit there on a monthly basis, a yearly basis, whatever it is, look at how much gross profit are we making on our general building materials? How much for the wood? How much for the plumbing? How much for the electrical, the garden center? This is now helping you realize what divisions of your business are making you money and what is not working so well. So it's helping you get more drilled in information, more specific information. And this really, for most small businesses, is about as far as you need to go. This kind of information is very, very, very valuable to you, because it's really showing you where your business is making money and where it's not making so much money. Let's have a look at the next slide. So that's what I'm summarizing there. Is you can thus assess the gross profit or contribution of each inventory group. And this is telling where you are or are not making money in your business. And so this information is the easiest and fastest way to make decisions about how to run your business going forward to increase profitability. Now, we're looking at gross profit or contribution. And I'm doing this for a very specific reason, is to help you understand something, which is, like everything else, very important. Is so far we've looked at a markup of 100%, which means a cost of sales of 50%. So that's going backwards. If we mark up from 100 to 200, that's 100% markup. But if we start with sales of 200 and we go down to our cost of sales, which is 100, that's 50%. And that's a gross profit or contribution also of 50%. Okay. Now, so I've just made an example that if you've got monthly sales of $20,000 with a cost of sales of $10,000, and that's a gross profit or contribution also of $10,000. Okay, that's using that 100% markup. That 10,000 contribution that you've got is the amount of money that you've got available to you as the business owner to pay all of your monthly expenses. That makes sense, eh? And what I'm saying here to you, and this is the concept that I'm hammering in. What is more important here? The percentage gross profit or the number of dollars that you're earning? Do you want to go and tell people that you make a gross profit of 50%, but you've only got $10 in your bank account? Or do you want to tell them that your gross profit actually is any other percentage, 30%, 50%, whatever, but I've got thousands of dollars because I've got lots of people buying stuff from me? The percentages don't pay any expenses. Dollars pay. End of story is what I've written there. Is how much gross profit or what your contribution, same thing is, in dollars, is absolutely everything for you as a business owner, not percentages. It's the hugest mistake that people make, especially in the fast food business and whatever, where they're trying to keep your food costs or cost of sales as low as possible. But when you sit there and you've got no customers, it's not making any money at all. You want people walking in through the door. You want people spending their money in your business. You want to make, in dollar terms, the biggest gross profit or contribution that you possibly can do on a monthly basis. That is what is going to take you forward in life in your business, not just trying to keep your cost of sale percentage as low as possible. This is the point that I'm making. And I'll just give you an example here. What would happen if you change your markup to 50%? So I'm saying that if we use the same cost of sales number of 10,000, now we're marking up by 50%, the sales would then be $15,000. All right. So you'd be worse off because now you've only got a $5,000 gross profit, $5,000 gross profit sitting there. But what would happen if your sales became $30,000? In other words, you've doubled your sales by using a lower markup compared to I'm talking the 30,000 double of the 15,000. Because the markup is now 50%, we would have sold stock costing $20,000 to attain the sales of 30,000. So 20%, 20,000 plus 50% is 20 plus $10,000 gives us the sales of 30,000. So we're still having the $10,000 gross profit that we got with a much lower sales number using 100% markup. So I'm just explaining to you, this is the whole story about successfully running a business. It's finding that balance which maximizes your sales number while minimizing the cost of sales number to maximize your gross profit or contribution number in dollars, not a percentage. That is the big story of business. And this is, I can make a video about how to help you with this. Let's see what happens. But that is your whole story. It's very difficult. You know, obviously, I can't go back to the previous slide, but obviously you've got to look at what your competition's doing. There's all sorts of things that's going on. But we can drill into that in another video. Just the last thing I've brought up there is you have, in most accounting systems as well, there'll be other ways to break up your stock or inventory, for example, categories. The groups were affecting the general ledger. Categories don't. Okay, this isn't the accounting system that I'm used to. But you can make then reports of sales by inventory category. And say in your own business, how would it help you? And I'm just again giving an example in the hardware store, that the categories that you could use, for instance, is you make each supplier an inventory category. And so you could print your sales with the gross profit by supplier rather than the actual stock items. Just giving you a different way of looking at the same thing. Really what is helping you assess. Because you've normally got more than one supplier for the same item in a business like a hardware store. It's really telling you which supplier you are making the most money from. And it's telling you a story. You're better off dealing with that supplier and dealing with that supplier's stock than the supplier that you're not making so much money. Like I say, you've always got to think out of the box into your own business about how to do the best. And then the final slide. Summary. Your gross profit or contribution in dollar terms is what business is all about. Dollar pays the bills. Percentages do not pay the bills. You know, if you're maximizing your gross profit or contribution, after you've paid for all of your other expenses that you got on a monthly basis, any money that's left over is your net profit. And that is the money that you can use to grow your business. And with the information that we've gone through in very simple terms so far, you're starting to get quite a good idea where to put any spare money that you've got, where to invest it to make more money. Because obviously you want to invest money in what's making you money. You don't want to flog a dead horse. Just put your good money in good places. Thank you for watching this. The next video, I think I'm just going to go through a couple of common business types. It's just to give you some tips about this information that we've just gone through. I think it's the best step for me to do next. So that's what I will do, go through some common business areas, common types of businesses, and how you can play with these numbers in those common business types. Right. Thank you very much for watching.